My name is Greg Chin, and I'm a partner with Cohn Resnick, the leading national CPA firm providing audit, tax, and consulting services to the cannabis industry. I help clients by performing due diligence when they are buying and selling businesses. And over the past few years, on behalf of MSOs, private equity investors, and lenders, we've worked on dozens of transactions, including the deal that brought Curaleaf and Grassroots together. So it's my honor to introduce our keynote speakers, Mitchel Kahn and Joe Lusardi. Both are pioneers and continue to propel the industry forward. In July 2020, Curaleaf, a leading medical and wellness cannabis operator in the US, closed a landmark $830 million acquisition of Grassroots, creating the world's largest cannabis company. Frank Segall will get into the weeds of this deal with Joe, CEO of Curaleaf, and Mitch, Grassroots Co-Founder and CEO, an active member of the Curaleaf Board of Directors.
Good afternoon, everybody. Am I on? Okay, can't hear me. Welcome back. And we have a very exciting interview opportunity here with two of the leading pioneers in the industry. And personally, as an M&A attorney and doing some roll-ups in the space myself with some clients, I'm very excited to hear about this transaction, how it came to pass, and where this company, Curaleaf being the mega player in the space now, is headed. 23 states, 135 dispensaries, 88 locations, 30 processing, 22 cultivation, 2 million square feet. That's what came out of a meeting between Mitchel Kahn, the CEO and founder of Grassroots, and Joe Lusardi, the CEO of Curaleaf. And we welcome you to our conference today. Thank you for being with us. Mitch, I'd like to start by having you talk about how you got into the industry. You were, president of Hilco and CEO of Hilco Real Estate back in 2012 or so, and hear your story right up to the point before you and Joe met and talked about this deal. And then the audience would like to hear from Joe as well, and then we can get into the deal itself.
Sure. Thanks, Frank. I will do my best to do it in an abbreviated fashion, but we got into the industry, quite frankly, without, we don't have there's not a great story of how we did it or some unfortunate difficult circumstance that's got us in the industry. My partner walked into my office one day and pointed out that Illinois had passed this new law and that we should do this because we thought there were some opportunities. And after I wondered if he had lost his mind completely because people were getting arrested back in 2013 all over the country, California in particular, it was a bit of a dicey time in the cannabis world. We did a lot of investigating, went out to California, Colorado numbers of times. And ultimately, after an interesting conversation with my dad is really one of the things that really moved the needle for us. He was a guy who, when I was young, looked at me and said, if I ever catch you with marijuana, you don't have to worry about the cops finding you. I'm going to call them myself. And I'm not sure if he would have done it, but I think he might have. So, we sat down, talked about kind of this new opportunity we were looking at. And he looked at me and said, if you can find me something for my arthritis, I'll take anything you can get me. And it was one of those moments where I looked at my partner and said, look, if he's going to change his view, I think the whole world's going to change their view on this. And I think there's a real opportunity here. And it was really one of the moments that kind of pushed us to get this done. Unfortunately, 3.5 years ago, he passed away, and he's not here to see kind of what grew out of it. But he would sure be amazed with what was built over the last number of years. And then, we were fortunate to, we applied it, in Illinois for both cultivation and processing and dispensary licenses, won an initial 3 licenses here in Illinois. And then we were off to the races, and we were fortunate over about a 3-year period to merge with another group here in Illinois, and brought on another partner who was the leader of that group, who really kind of drove our licensing win effort. I think we were for a good time probably the leading organic license winner in the country from competitive applications, winning licenses in Maryland, Pennsylvania, Ohio. And we went through this process of incredible growth, trying to manage the business, trying to hire people. And as Joe can attest to, the early days of this industry, the most challenging part of the business certainly wasn't the regulators, which was hard enough. It wasn't the competitive processes. It was the people, and finding the right people to work for us in an environment where the only folks who wanted to work for us 6 or 7 years ago were people who really, really, really loved the plant. And that comes with plenty of challenges, as I'm sure plenty who are out there know and understand. So, we grew the business to where it was kind of in early 2019. We'd raised about $165 million in state-by-state processes up to that point. And, we looked around and said, we think the moment is right. Either we got to go public or we got to look for some other opportunities. And we were poised to go public. We talked to a number of other potential partners, some interesting opportunities. And then kind of fate created an opportunity for Joe and I to get together. We actually met in the airport in Boston. And I think very, very, very quickly came to the conclusion that obviously from just a pure dots on the map perspective, this deal made a ton of sense, but that we had a lot of very similar background, very similar philosophies, had come to where we were very differently. Joe will tell his story, but they did a lot of what they did through acquisition rather than through organic growth. But other than that, we had just a tremendous amount of kind of similarity of view of where the industry was and where it was headed. So I guess I'll leave it there and you can get to the deal later. And I'll let Joe kind of tell his version. But that's a quick story, Frank, if that's helpful.
No, I appreciate that. Just one question before we turn it over to Joe, because a lot of people in the audience want to know about this. I mean, you raised $165 million from investors. Can you talk about, how difficult that was and how you targeted or whom you targeted, or was it a lot of just people continuing to add on because they were buying into the story? Because as we know, capital is very difficult today for the companies trying to launch in this space.
Yeah, Frank, it was all easy.
Yeah.
We were fortunate. We came from the real estate world, and we came from a world where we had raised a fair amount of money to support real estate transactions over about a 20-year period. So we had a nice group of investors that kind of was our starting point. And a couple of those folks really were key people throughout the whole process for us. We did things like dumb real estate guys did. We did state by state. So each state we would win, we would then raise money in that state by state. And we were fortunate enough to be able to do it mostly. We started with that initial group. It grew to kind of a friends and family situation from there, wealthy families, family offices. And then the last couple rounds really was all of those folks. And then we added the cannabis fund investors that had grown to, there were probably, at that point, 15 or so cannabis funds that had anywhere from probably $20 to $100 million they had raised. So we ended up with a good number of those folks in our last couple rounds as well. But it was certainly challenging. We can get to it later if you want to hear a great story about not quite having enough money in one of our states and having some challenges on the construction side because of that. But it was very, very tough. There were moments in time, as there are still today, where it got very easy. And then 2 weeks later, the market would just stop dead and it would get very challenging to raise money. But, I think in some respects, the easiest group to raise money from the entire way through this process has been wealthy family and family office folks, because they're not tied to the institution thought process like the cannabis fund guys are. And I think they're still even today, they're very much interested in getting into the space.
This industry, I think you got into the space maybe back as early as 2010. Can you share your story with our attendees today?
Yeah, sure. Happy to do it. I'll give the abridged version. It's been I've been in the industry for 10 years now, so I won't take you through all the ups and downs. But really, in short, in 2009, Maine passed a medical marijuana bill, the first of its kind on the East Coast, that was going to allow dispensaries, vertical dispensaries. And I was at Fidelity Investments at the time in Boston in their private equity arm. And much like Mitch's partner, I sort of floated the idea and was laughed out of the room in about 2 seconds. Not at the appetite of Fidelity at the time. So I went off and did it on my own. I basically scratched together $130,000, and we applied for a license in Maine. We had no business winning. We had no experience. We just made everything up. Won a license, and then said, "Holy shit, we can actually do this." Literally started the grow operation with a trailer. We brought in a storage container off a truck and put some lights in it, and that's how we started the business. And really, what happened to me was I really viewed it as more of an economic opportunity. I was not really a cannabis user, but I understood what was happening, and there was a lot of anecdotal evidence building around the efficacy of cannabis. So I really saw the industry as a potential growth industry. But what really got me to be truly passionate about it is when we opened our first dispensary in July of 2011, and it just changed my world. The people that came in there the first month, I mean, a lot of them died. I mean, in short order, these people were terminal, like the most desperate, sick people you've ever seen, coming in and, crying, buying the product. So it was a real life-changing moment for me, and really it became more of a personal mission to be part of the cannabis industry at that point. About 5 years ago, I hooked up with our chairman, Boris Jordan. So he had invested in a company called Paliatech. And they had a vertical operation in New Jersey, one of the first ones in New Jersey. And he and I agreed to get together and combine our efforts. I had an application pending in Massachusetts. He had one pending in New York, which ultimately we came to build out. And together we went off and went on a buying spree. We won a lot of stuff. We built a lot of stuff greenfield. Then we acquired a bunch of assets along the way to build what is now Curaleaf. We raised about $800 million over that time period, have done more deals than I can really even remember at this point. A lot of small bolt-ons, a lot of big deals like in Florida, Connecticut. And then, of course, we did the deals with Select and Grassroots to what it is today. And, from our perspective, much like, what Mitch said, when Mitch and I got together, based on my experience, both in cannabis, but prior to that, I'm a private equity, deal roll-up guy at heart. This was my first rodeo as a CEO. And what I've learned is that culture is probably the single biggest and underrated determining factor in a merger success. And, Mitch and I got to know each other over a couple of months, and we really came to like each other and respect each other and really see in each other's companies a similar culture and a similar approach to the industry. And I think more than anything, that was what really drove the deal and made it so compelling. We could have both, gone off our own ways and been very successful. They were building a great business like Curaleaf, but we felt that our combined businesses would be stronger. We'd get to scale faster, and we felt the integration would be seamless because we build similar cultures. And, now having done it, this is Mitch can probably attest, this is one of the smoothest integrations I've ever been part of. The business is just, connected like Lego pieces. We did a very small reduction in force, but primarily kept most of the people. Some of Mitch's team ascended to senior roles in Curaleaf and vice versa. And so we're now running a combined organization that, will be the number one player in cannabis for a long time. That's sort of been our goal. And we're going to continue to invest in the business and expand it as we go into 21 and beyond. Hey, Frank, I'm sorry, I can't hear you.
Yeah,
there you go. There's a slight delay there.
Oh, sorry. Yeah, it's kind of like a Godzilla movie, I think. So sorry about that. But you talk about cultivation. I'm sorry, the culture and integration, which is key in any successful merger. I was going to ask that question, which you addressed it. But I'd like to just take one step back. Who actually approached? Who was the first to approach the other person on this deal or this idea?
Think our deal guys got together. I think it was our head of business development, Ed Kellenchuk, and Mitch's guy. I mean, cannabis is a small industry, right? It's not that big, and everybody sort of knows of each other. I think our deal guys are the ones that spoke first, and then it got up to Mitch and my level.
Yeah, I think they actually met at one of the cocktail parties in Vegas the November before, and that kind of ultimately led to let's get together and have a conversation. And we met, was it Joe, maybe March or April of 2009, something like that.
Yeah, that sounds right. Yeah.
It,
Yeah. And I think I would just, honestly, one of the things that I would emphasize is, because we've done a lot of M&A and for people that are, curious about it, I can't emphasize enough, networking. It's just, M&A deals, when you build your funnel and your pipeline, I mean, sometimes it's years in the making, and sometimes it's, from people you met 2 years ago. And even the Select deal, we knew of Select, 2 years before we did the deal, and we actually flirted with them for a couple of times before we actually were able to bring a deal together. So networking is critically important, knowing who's out there, knowing who your competitors are and what people are doing, and really keeping an eye on the people you respect, because you just never know what's going to happen.
I think, Frank, the other interesting thing, to note is that this deal happened and really was, began, and the handshake happened with no investment bankers at the table.
Yeah.
And
I was going to say that. Yeah, I was going to ask you that question because this industry doesn't really have.
Yeah, sorry. Go ahead, Frank.
I was going to say, no, that was one of the things I was going to ask you is if you had a banker, because I get calls from bankers all the time wanting to get into the industry. And as Joe said, this is about relationships. You know each other. You don't really, they're going to hate when I say this, you don't necessarily need one, or you need one who has those relationships. And a lot of bankers are just, they're neophytes to this industry. So I'm not surprised to hear that.
No, Joe's 100% right. I mean, the industry is very small. He and I either know very well or reasonably well or kind of know virtually every CEO in the industry. And, the investment bankers certainly played a role as the deal got through the process, because it was, as any deal of scale is complicated. And, this is, I've done, as Joe has, I've done deals my whole life. This is, the largest and most personal transaction I've ever done. But, and it was by far and away the most complicated, difficult transaction I've ever been involved in. You got a lot of states, you got a lot of regulations. And as we all know, those of us who've been involved in the industry from very early days, there were a lot of funky structures and things we all had to do that then had to get rethought through as you were putting a real business together. So that made this deal very, very challenging and complex.
Yeah, Mitch, we also had to overlay the Department of Justice on top of that.
So we'll get into
people that followed from the sidelines. We had the pleasure of going through a Hart-Scott-Rodino review with the DOJ for about 9 months, and that maybe took about 9 years off our collective lives, but we made it through.
Well, I want to talk about that.
9 years and about $4 or $5 million between us of fees.
Exactly.
Before we get to Hart-Scott, and we do want to talk about that, talk about actually how the deal was structured. I mean, it was a merger, but what went into the discussions about valuation? And everyone always says, how do you value, particularly these large MSOs? It's a new industry. It's not like selling a chemical company or a widget company. It's 5 times EBITDA, X times gross. How was the price actually constructed, or was it just a value proposition?
Well, I think and Joe can tell you from his side, but we just put a big dartboard up in the room and threw darts, and that's where we ended up. Right. Look, I think, Frank, that the challenge in this industry is that it's so young, and especially when we struck this deal, so few things we all had were at full capacity, if you will. We're at full run rate. So you really have to do a lot of extrapolating to kind of think through where you're going to end up. I think that there were a fair amount of comps out there in many regards. If you looked at where the public companies were trading, that gives you a good kind of benchmark at the time of how people viewed value. And I think that certainly was a stake in the ground that helped us kind of get to a value that made sense. I'll also tell you, though, from my perspective, the key is, in a lot of ways, is relative value, because the way we struck the deal was essentially a stock for stock transaction. And in my opinion, had we not done it that way, the crazy volatility in the market would have blown this deal up over the course of the year that we were trying to get it done. But because the way we did it, each of our valuations went up and down together, if you will, based on the stock for stock nature of the deal. And that really allowed the deal to continue to happen.
Yeah. Well, I'm sorry, go ahead,
I would
Joe.
agree. Now, Frank, I would just add that, a deal of this size is more art than science. And I know that's not going to be a great answer for people, but if you're talking about a single state asset, particularly in a market that's already had a couple of years of experience, very easy to value, and there are all kinds of multiples out there and ways to come at it. But the second you get to the complexity of something like Grassroots, then all that goes out the window, and then it's very much many more factors come into it: relative value, comparables, DCFs. There's a bunch of ways you got to look at it, and then at the end of the day, it really comes down to, does it make sense for your shareholders, right? Both Mitch and I work for our shareholders, and, they're the ultimate decision makers about, the value of the business and go forward. And I think we got to a spot where both shareholders, felt happy that it was a good deal and it created value. And that's ultimately how it came together. And again, this one's definitely more art than science.
Well, Mitch, you actually started to address a question I was going to ask. These transactions take a long period of time because of each state's change of control, regulatory issues, and then we get into Harscott in a minute. But one of the questions I wanted to ask, which you started to address, was how did you address the volatility of a year later when you finally close with the valuation? And it sounds like you baked that in because it was a stock for stock and everyone took the risk up or down together. It sounds like that was the structure.
It was. And I will admit to you, I'm not sure. First of all, I don't think any of us thought this was going to take a year. I think we thought it would take, maybe 6-7 months, but, the wonderful Mr. Barr and the Justice Department kind of changed that timing for us a little. But, the stock for stock nature of the deal, Frank, is really what let this deal get done. And I don't know that from our side, we really had thought through how important that would be in the structure. But it was actually a great lesson to me as I look to the future and look at other opportunities and other deals. It really is a critical way to help structure a transaction, because had it been structured almost any other way, the crazy volatility over the course of the year would have very likely caused the deal to not happen. Almost any other way it would have been structured.
Yeah, I agree with you, Mitch. And we had some, we commiserated together, in the spring when the Curaleaf stock was, down to like $5. But, today I don't even know what it is today. It's $12 and something. So, today Grassroots looks like it's worth more than $1 billion. So it is what it is. It's a new industry. It's volatile. Everybody went into it knowing that we're on a junior exchange in Canada, and that there's a lot of things in front of us that have to happen. But ultimately, I think the relative value, I agree, is what kept the deal together, because we were all in the rowboat at the same time. We all go up and down together.
And Frank,
yeah, go ahead.
To give you perspective, when we shook hands on the deal was actually about a $1.1 billion transaction. And between when we shook hands and when we ultimately signed and announced the deal, it came down to 875. But again, in our view, those are just numbers on a piece of paper at a moment in time. And we did the deal because we believed that it was a better avenue for our shareholders to get liquidity and get more for their investment over a period of time than had we gone public. And I still believe that to this day, and I think it will. I think you'll see over the next 12 months. I think that it's going to change dramatically.
But in the original structure, wasn't there a cash component? And then that was modified.
Yes, there was a little bit of cash. I mean, a small percentage of the deal was in cash, not decent dollar amount, but a small percentage of the deal was in cash, and that did get changed as we got to the end of the deal.
Yeah, and I think Frank, just on that point, I think going back to Mitch's comments about raising capital, what we mutually agreed to was that instead of taking that cash and putting it into the hands of the shareholders right away, it made sense to leave it in the business and really grow the business. Illinois, when adult use, we're in these very fast growth, high paced markets, and this industry is capital intensive, particularly when you're going to do it at scale. And given how difficult the money raising environment was at the time, and not sure our ability to go out and raise money again, we really felt that it was just more prudent to keep the money in the business. So really we changed it from cash to stock, but we never changed the actual transaction value. We never renegotiated sort of the overall what Grassroots was worth. In fact, a year later, it was performing quite well and really gave us no reason to think about it was worth anything less than what we shook hands on. So it was just a small change in the consideration that made the deal easier for Curaleaf to execute on. And Mitch is a big shareholder in Curaleaf, so it really was about what's right for the company. You got to remember, it's not an exit for anybody, right? I mean, we're now partners. Mitch is on the board. We're in this together. Our shareholders are all together. So it's really about what's right for the, Curaleaf.
And what's for our audience, the lockup period is, 3 years, 3.5 years? And it burns off. Can you talk about that?
Yeah, it was and again, Joe can speak about it as well, but it's I think in many ways the most thoughtful lockup you've seen from any of the deals that got done out there. It's a very slow release, quarter by quarter, over about a 3.5 year period between now and the end of 2023. So it allows everybody to get liquidity as we come. I can tell you personally, I'm very much a believer in this company. So although my financial advisors would certainly tell me I need to sell some amount of stock, I'm a long-term believer and a long-term holder for sure in the stock. And I think most of our shareholders feel the same.
Yeah, and there's also, I think it's important to say that the stock release represents the landscape today, which is we're on a junior exchange and we're not U.S. listed, but there is a provision to release faster when we get on a U.S. exchange, and I think that frankly is the moment that all these stocks are going to dramatically revalue. If you look at the Canadians versus the U.S. companies, there's just no question in anybody's mind the U.S. assets are higher quality, better performing assets, but we can't list on a U.S. exchange, and that really limits the people that can invest in the stock and the volume of the trading every day, and that's going to change at some point. And I think at that point the lockup will be revisited because I think you'll see a tremendous amount of volume when we're on U.S. exchanges.
Mm-hmm. Joe, let me ask you a question about mechanics and structuring of a deal of this size. In this particular deal, each state has their own transfer regulatory consent requirements. Did you build in that you had to have everything approved, or you had to have a certain amount approved before you would close? And are you still actually closing on the transfer of assets?
Yeah, we are still closing up some loose ends. It was as Mitch said, I mean, this is a very complicated deal. For example, in Maryland, we have overlap, right? So we have more assets than we can own. And so we're in the process of divesting the Curaleaf asset, and then we'll go to the regulators and bring in the Grassroots asset. So the deal is not fully done yet, but most of the assets are now consolidated and controlled by Curaleaf. And it was just an acknowledgement that you're right. We have to deal with regulators state by state. They move at their own pace, unfortunately, not one that we always like, but we have to acknowledge that they have a lot of work to do. And so we're mostly closed with the deal. There's a couple loose ends that we'll look to wrap up here in the fourth quarter.
And did you build in protective provisions if assets don't transfer, then the price gets further adjusted? Or was it pretty much a transfer of the consideration because you were comfortable with closing?
I mean, at this point now, where the deal is done, the consideration is going to be fully realized, and everything's going to transfer. Again, I think it's from our perspective, there were some things like overlap in states that made it a little bit more complicated and require us to divest. So it's just dragging on a little bit, but the deal will be fully realized. And yeah, there were some protections, but those are all behind us now. I mean, really, we got to the point at closing where we were satisfied that we had met most of the state requirements and that the risk was so low on those other assets that it was prudent to close.
So you mentioned one of the biggest obstacles you encountered, but I'd love to hear about, what were the key obstacles, including dealing with the FTC and the Hart-Scott, and what you feel happened there. Maybe it was political, and what you think will happen to the next guy with a deal of this nature having to go through Hart-Scott, and what suggestions or recommendations you might have to people in the audience.
Yeah, you want to go first, Joe?
Yeah, I mean, look, it's hard to predict the future. I mean, let's see what happens next Tuesday. I think that without getting too carried away, I think the DOJ is now up the curve on the cannabis industry. I think it's very clear that the Select deal or the Grassroots deal had zero competitive issues to it, and so. We'll see. I think it's unlikely the next big deal will get flagged, but it's hard to predict what goes on in DC. But that was certainly a big obstacle. There's absolutely no doubt about it. That really set our timeline back. I mean, as Mitch said, it was just a huge, not only in terms of capital, but just time and energy. I mean, going through that process is really invasive. I mean, for people that haven't done it, I mean, they really give you the full exam. They go through your emails and your phone records and all your documents. It's pretty extensive. And so that definitely set us back. And then, of course, state by state, we have encountered, significant delays in certain areas of the country, given how overwhelmed these regulators are, with getting stuff done. Luckily and thankfully, we're past most of that now, but it's certainly been a long road. I guess, Mitch, it's been a year and a half since we first met. So it's been a hell of a ride.
Sure has. The only thing I would probably add to that, Frank, I'm probably not quite as politically correct as Joe is sometimes, but the DOJ process, quite honestly, was a joke. It was the most intrusive thing I've ever been involved in. As Joe said, they took about 7 or 8 or 9 of us on each side. Every email, every text we sent, every Facebook post people made, looked at everything, allegedly. But what came out afterwards, and if you saw this a few months ago, the whistleblower who came out and said what they said about Barr, that he did this just because he didn't like cannabis, and he directed them to do it even though they knew there was no concerns and no antitrust issues. And beyond that, they said they never even looked at the information we provided them. So, pretty offensive. And, if there was some way to sue the government for what they did, we probably would have. But obviously that's not possible nor reasonable. But, I would say what Joe did, I think there's a reasonable likelihood, certainly deals not quite of this scale. I think there's a reasonable likelihood at this point you won't have to go through the process, I think. But again, let's see what happens Tuesday and who's sitting in that chair.
Yeah, I think the other thing I would just bring home on this point is that, in that time between when we, basically said we're going to do this deal and then we close, I mean, that can be super disruptive for both organizations, right? You have this unknown future, and a lot of people are wondering what their jobs are going to be. And so it creates a lot of uncertainty. I think that's where it really comes down to knowing the quality of the asset you're buying and your counterparties, and feeling confident that they're going to continue to, run the business and do a great job. I know Mitch can talk about how difficult it was on his end to, keep everybody rowing the boat in the same direction and, not worry about the future while you're trying to build the business. And especially when you have a deal upcoming. So certainly significant management challenges, but we always had confidence in Mitch and his team, and I think vice versa, that we were going to keep creating value and running the business and growing it. And even though it took longer than we hoped, the reality is both companies were just that much further along in their development. And so I think you're going to see, I really think you're going to see here pretty soon, Q4, really Q1, what we've built collectively and all the energy we've put into, building capacity and distribution and retail outlets is really going to come together in, I think, a very special way, in 21. So as painful as it was, there's no doubt it was worth it.
Well, the other thing that, go ahead, Mitch.
No, I was just going to say, I mean, Joe brings up a great point. It was, once you got past the initial shock that folks in our shop had over this, we had 4 or 5 months where it was kind of business as usual, no big deal. After the new year, you're dealing with people who are, some are, kind of middle-level folks, some senior people who obviously are, counting on that paycheck in their job every day for their livelihood. And people got very, very, very concerned about, how long is this going to go on? Am I going to have a job? What does integration look like? And the process prohibits you from communicating with the other side in a meaningful way until you get through the process with DOJ. So we really didn't have any answers for people. And it was very challenging, but super important. We were ahead of the process. We put in place things like stay bonus programs and other economic incentives for people from day one. And we also really, Matt, Darren, who's my partner, and I really spent a ton of time thinking about and working on things like that Joe talked about at the beginning of this call, culture, right? It was critical that people kept their head down and worried about running the business, not worried about what was going to happen to them and what their next job was going to be, and stressing about it, looking for new opportunities. And, had that happened, we would have been in a more challenging place when we got to the end. And, and then maybe there would have been a different conversation about the value the businesses were. So, I think it is for people who are going through this process or contemplating going through it. It's, one of the most important things is to think about that all up front as best you can. Because of the antitrust issues in HSR, you may not be able to do much during that interim period, and really need to think through it very, very carefully and very smartly before you sign anything.
Well, the other thing that I think was working for your advantage that people are confronted with today is you signed this deal up pre-pandemic, and trying to get an M&A transaction done in this environment, and we do a fair amount of them, very difficult because obviously people want to meet, people want to kick the tires. I'm wondering what your perspective is on that as you go forward. Joe, how do you see, getting new deals done, and what is your mandate to, do you feed this beast? Do you digest for now? I mean, where do you and Mitch go, from this point forward?
Well, the first thing I would say is there's no shortcuts in M&A if you're going to do a good deal. If you have to do your due diligence and you have to do it thoroughly to make sure you know what you're getting, because that's a recipe for a bad deal. So nothing can be rushed, in my opinion, in terms of understanding what you're getting. That doesn't make it a challenge in these times. And so you probably need to build in a longer horizon for getting deals done just generally. In terms of how we're going to, take Curaleaf, we're very satisfied with the platform that we have now in the states that we're in. We're in, 23 states, the most highest populous states in the country, and most of the fastest growing states. So we're really thinking more about going deeper in the states that we're in versus going wider at this point. We'll potentially be doing some bolt-ons here and there to go deeper in markets that we like, but we've got an unmatched platform, and the growth ahead of us we think is going to be very significant. I think next Tuesday is going to be a very significant day in cannabis history. The passage of an adult use bill in New Jersey is going to be the single catalyst to, I really think, move the entire East Coast to adult use in the next 36 months. There's no way that states like New York and Pennsylvania and Connecticut are going to be able to just stand by and watch all that tax revenue going to New Jersey, given the massive deficit deeper in the markets we're in. I think that that's going to set us up for some pretty significant growth. Frank, we can't hear you. Or at least I can't.
Yeah, I can't either.
Can you guys hear?
Yep, now you're back.
Yeah, there we go. I was going to say, Mitch, what do you, having gone through this, and Joe as well, what does this say to the industry? Do you have to go big or go home? Are roll-ups, back in the next wave? If I'm sitting in the audience and I'm getting into this industry, what should I be thinking about so that I can be competitive or I can survive in this industry?
Well, look, I can tell you from our perspective and my personal perspective, we believed that scale was going to be critically important to success. It's why we did what we did. Had we not done this deal, it's why we were going to go public, and we had 2 or 3 large transactions ready to go if we would have done that. Scale is going to matter an enormous amount, in my opinion. Depending on what happens next Tuesday, if things begin to transition to moving to U.S. exchanges, all that's going to be, the benefit of all those things is going to be much, much bigger for the largest, more successful companies, in my opinion. But like any industry, Frank, I don't think that means that's the only place you can be in the industry, right? I think that for the most part, my view of things is success in most sectors comes in 2 places: big and small. And the guys in the middle generally are the guys that really have a challenging time. So I think what that means in this industry is you're going to see a number of very, on the operating side of the business, on the grow, process, dispense side of the business, if you will. You have 3 or 4 very large public MSOs, a few more coming behind that, a couple private guys that may jump into the mix. But you're going to end up with a group of large public MSOs, I think, that propel the industry over the next, call it 36 to 40 to 48 months. I also think that you will begin to see, in a more meaningful way, real craft businesses, if you will, in certain states continue to build and grow. I think the people that will have a real challenge, personally, this is my view, are the guys who are in the middle. Somebody who's got 2 or 3 or 4 states, tries to compete with the MSOs, but can't really do that, and is, bigger than some of the single state real craft operators, if you will. And I think that's not unusual. That's how many, many sectors operate. I think things that nobody thinks about when they have this conversation, talent, for example, right? The bigger companies can afford to bring in better and better talent. The folks stuck in the middle can't afford to do that. They don't have enough infrastructure. They don't have enough of revenue to justify those costs. So I think that gap is going to widen between the big guys and the medium-sized guys, but I do believe that there is significant room in the right places, very well thought out, for certain smaller single state or kind of 2-state operators to be successful.
Yeah, I would agree. I mean, I look, this is only the second inning of cannabis. It's still very early days. I think for people that want to get into it, I would encourage anybody to, give it serious thought. It's still very early days, but as Mitch said, scale is going to matter. It depends on your strategy. Curaleaf is trying to create national brands, right? We just announced this morning that Select is now in its 15th market, Illinois, and it will be in 23 markets by the end of the year. Or by early next year. But what does that mean? I mean, that means you have to put a huge amount of resources behind that to support that brand. I mean, we estimate a national marketing campaign alone could be $50 to $100 million for a brand. And then so, you're not going to do that if you're a single state boutique operator, but that doesn't mean there's not a lot of value you can create for yourselves at, different points in the industry. And I agree with Mitch wholeheartedly. I think that, small operators can be boutique. They can create innovations and novel brands and form factors and quality that potentially is elusive to people that are trying to grow at scale. So I've never been more optimistic about the industry. Let's see what happens on Tuesday, because that could really change the landscape dramatically. But I think there's a huge amount of white space in this industry. It's so early days, and this is a brand new paradigm. I mean, people want to say it's like alcohol, and I think to a degree it is, but there's no product that covers such a wide spectrum of uses, from medical to wellness to adult use, and so there's a huge amount of room still for innovation and value creation. It's one of the most exciting industries I can think of in the world right now.
What would you say are ancillary businesses that are undersupplied that you as a major operator and other operators need, that create opportunities for entrepreneurs in this space? Are there particular sectors that you think people should really start to be focused on, other than grow and retail and distribution?
Well, it's funny. I mean, Mitch, I'm curious your thoughts on this, but when I started going to the MJ BizCon conference in Vegas like 5 years ago, it was a couple hundred people in a small room, and unfortunately we won't be able to go to it this year, but last year it was massive, and there was I don't even know how many vendors, 10,000 vendors. So I mean, there's a huge amount of innovation happening up and down the supply chain, manufacturing, testing, packaging, you name it. I'm not sure I could even hone in on any one, other than to say that it's still early days, and there's a lot of innovation happening in the space. And so, I think there's a lot of room for people still to make a mark in cannabis.
Yeah, I think, even more to the point in some ways, in my view, Frank, every single ancillary business is wide open. They're literally, in my view, I have a very hard time thinking of any particular ancillary space where there is a clear winner or two at this point that, kind of like there's beginning to be able to be seen, obviously, in the MSO side. There are, for a lot of reasons, there's a lot of innovation, a lot of interesting things happening, but nobody owns any particular space, or two or three guys own any particular space. The POS operators are, there's a handful fighting for that opportunity, and I think some have really interesting, innovative products. But quite honestly, you could buy a more sophisticated POS system for $100 online to open a clothing store than is available to us in the cannabis industry today. That's changing dramatically. It has changed over the last couple of years. But someone will figure out a way to be the winner in that space, or amalgamate two or three of the guys, improve the product, and become the winner. But that hasn't happened. The same thing on the packaging side. I think there's a lot of opportunity out there. And I think, again, not to put too much weight on what happens next Tuesday, but depending on what happens next Tuesday, you could see a dramatic inflow into the space of new interest and new capital and new investment from a lot of institutions, both investment institutions, but more importantly, business operators across multiple spaces, who finally say, you know what, it's now safe enough, we can do this. And I think that will change the landscape of the ancillary businesses in a major way.
One last question, and we appreciate you guys again being with us today. I'm going to ask this to Joe, because I know the answer from Mitch. Joe, you're very bullish on this, where Curaleaf is headed, but what is your biggest concern? I mean, what does keep you up at night? The reason I'm not asking Mitch is because I assume it's the stock price of Curaleaf, so that's easy to answer. But what is it in your business that you're concerned with? I mean, everyone, in the beginning stages was, the legality of it. I think we're beyond that. But what's your biggest concern at being a major MSO that you share?
Yeah, look, the biggest concern is the stuff you can't control, right? And there's a lot of it in cannabis, but certainly the thing that keeps me up at night is the federal government still. If you look at what happened with hemp, I think you guys just had a panel on hemp. I mean, the FDA completely destroyed that industry. Threw a wet blanket on it, stifled, innovation, investment, and there's a real risk here that if the federal government is not thoughtful and the way that they resolve the conflict, the Schedule 1 issue, you could have a significant interference in the federal government that will make it very cost prohibitive for people to participate in the space. And that will crowd out a ton of innovation and a lot of people that want to get in that space very quickly, because you will need a huge amount of resources to do battle with the FDA and go through drug trials and God knows what other nightmare scenarios they try to put up in front of you. So that's what makes me worried, honestly. I think you got to be careful what you wish for. I think a lot of people are hopeful the federal government finally comes around on this and we resolve the conflict, but it's got to be done in a way that allows the industry to continue to grow and not go backwards.
But what do you share that opinion, or there's anything else besides the stock price that keeps you up at night?
Yeah, stock price does not keep me up at night, not even close, to be honest with you, Frank. It is, if you watch this stock price, it makes you, forever, the entire industry, it can make you insane because it is so crazy volatile. I mean, tell me another industry where the stock literally goes up or down 5% in a day for no reason, for literally no reason. That doesn't happen with non-cannabis stocks. And that's just a matter of the exchange we're on and the fact that real institutions feel like they can't own the stock because of the federal illegality of it. But I agree 1,000% with Joe. I think that the only thing that really keeps me up at night, I mean, look, there's a lot of challenges in this industry. The people side of the business is critically important. The regulators are hard to control sometimes. Regulators don't move at the pace we want them to. You have all the challenges with operating the grow facilities, and you have things that are out of your control that hurt harvests and all those kinds of things. But none of that has huge lasting impact. Those are little moments in time. The federal issues are obviously the key to the long-term success of this company and the entire industry. So that is for sure the only thing that really keeps me up at night, other than the fact that I'm old and I can't sleep. I can't sleep through the night anyway anymore. But
you gotta take some of your own product for that. But well, gentlemen, really appreciate your joining us today. Congratulations on major milestones in your careers, your lives, your employees' lives as well. Wish you continued success, and we hope to revisit with you next year and see what further growth and success Curaleaf has accomplished.